Hey, Greg Fitzgerald here. Taking a different format to our market update than we usually do, and gonna get into it and talk about where we're at in the last 90 days, year to date, and kind of compare it to where we were 2020, 2021, and 2022. In the last 3 months, we've still seen some cap rate decompression. Cap rates are up from 6.9 ish to 7.12 in the last 90 days, and the lease term remaining is 8.61. Year to date, we're at 6.95, and last year at this time, we were at 6.74. So surprisingly, we're only up about a quarter of a point on cap rates year over year from 2022. Looking back in 2021 in the same time frame, we were at 7.19. That kind of gives you a hint of where we're headed. I still think there's a decent gap between seller expectation and buyer expectation. We're still seeing transactions though. The average closing time frame right now is 50 days. It's really all cash, relatively quick close buyers. Not so much in the financing. At this time last year, or maybe in 2020, last year at this time, it was 78 days. That's telling me that it was some more financing was involved, and now we're not seeing any deals really with financing. Now, if you look back into 2020, the cap rates and the lease term remaining at this same time frame in 2020 were 7.5% with 11.32 years. We were doing 71% of our transactions on triple net. This can be a really good hint as to where we're headed in the next 6 months. That's probably going to be a normalized market condition in terms of cap rates, lease term remaining, and what to expect. So to wrap things up, there's still upward pressure on cap rates. The marketplace is still seeing transactions on high quality stuff with all cash buyers, and we're probably going to settle in at a little bit higher cap rate than we are now. So maybe 50 basis points of a jump in maybe an 18-month period between late 2022 headed into 2023. Thanks.